Oh, so good to be back with you. Thank you for joining us here today. I'm Marlin Bohling with you, and we're going to be talking now with Chris Swift of Swift Trading Incorporated, and he's based in Nashville. Chris, thank you for joining us here on the show. If you don't mind, let's go ahead and open up our trade, and let's go ahead and start with the corn. On the corn market right now, we are definitely setting a firmer tone as we go. And we have September corn now 2 3/4 cents higher at $3.10 per bushel, just 2 ticks off our high of the day. December now quoted 2 cents higher per bushel at $3.22 3/4. Let's move on to the soybean market here with quotes provided by bar chart. We have the August 2 higher. The active September contract now 2 1/4 cents higher at $8.68 per bushel, and that's only 1 tick from its high of the morning range. We have November now 3 3/4 higher at $8.71 1/4. That is sitting on the high of the day at the present moment. All right, now let's go on to wheat. Let's check out Chicago here first, where we have September 1 tick lower at $4.95 1/4 per bushel. In the Kansas City market, to get things rolling here on a Monday, we have September a penny and a quarter lower at $4.14 1/4, right in the middle of our trading range from last night and this morning. And Minneapolis spring wheat is currently down a penny and a quarter, and we're trading at $4.93 1/4 per bushel. Meanwhile, in that cotton market, we're getting things started with December 12 points higher, and we're at 62.48 cents per pound. So let's go back to Chris Swift here. And Chris, we have the big WASDE report coming out here on Wednesday. So what are you going to be looking for, and what is the trade actually getting positioned ahead of that report?
You know, Marlin, I'm not real sure that they're going to be looking for much of anything without any kind of physical harvest data just yet. It's going to be tough to get any kind of big changes out there. The one thing I did notice, we still had good exports. A lot of beans being marketed there, but still kind of hard to get them off of their lows because it looks like such a good crop out there.
All right, Chris, I was looking through the Commitment of Traders report that came out Friday, and I'm sure you probably have too. On the corn, I was a little bit surprised to see that they added about 29,000 contracts to their short positions, and that brings their short positions up to a whopping 172,820 contracts right now. Is that going to be burdensome heading into that report, or do you think that's okay?
I think that's pretty burdensome. And as well, we've noticed that a lot of old crop is being moved out of the bins. We saw from the American Railroad Association the past 2 weeks in a row an increase in grain movement from the rails. So it looks like they're moving a lot of corn out of the bins, getting ready for this year's crop. It looks like an earlier harvest this year due to the drier weather around most of the parts. So I have a sneaky feeling that the supply is going to be very burdensome to go through.
On the other hand, if you look at the soybeans, now here they have net long positions, but they really lightened up on those long positions. They're down to 44,219 contracts after selling almost 18,000 contracts last week. So that gets them a little more neutral, I guess, heading into the report.
Yeah, it does. And the bean market's very interesting because we have seen just about every day a new export sale to China. And we know that they have been really big buyers here, but it's been very little, if any, market movement due to that. So I can only assume that this year's crop is big, and believing that South America is going to continue to plant rainforest to rainforest with their beans, that it's going to be tough to get out of this supply issue that we're in.
I'm glad you brought that up, and I believe we have that graphic of the overnight export sales. There were 3 this morning, and they were fairly decent-sized sales, too. They were all soybeans. 2 of them were definitely to China, 1 to unknown, and there you have it. Soybeans, 111,000 tons in one tranche. We had the soybeans, 324,000 tons in another tranche, and another 264,000-ton sale as well. And yet we're only up about 2 or 3 cents. All right, Chris, we'll come back. We'll take a quick look at what's going on in our livestock trade when we come back right after this. Thanks for joining us. I'm Marlin Bohling. We're talking with Chris Swift right now. And I want to take a look at our livestock trade and looking, first of all, at our live cattle board. Let's go to the big board in Chicago. Right now, with our quotes provided by bar chart, we have August live cattle down 7 cents. We're at 102.72 per hundredweight, in October down just 12 cents. Now down 17 at 106.27. You can see the prices change on our live quotes here. On the feeder cattle market so far this morning, we have August down 40 cents at 142.32 per hundredweight. However, September really feeling the heat. Now we're down $1.07 at 144.05 in October, showing the biggest loss. It's down $1.20 at 145.20. And let's check out our lean hogs. They came surging out of the gate this morning. They're hanging right in there. August lean hogs are up $1 at $52 even per hundred. And you have October $2.30 higher at 53.27. We'll get to them in a second. What about this cattle market here, where it seems to be kind of weak in the knees to get things started here this morning? We had the beef cutout values that came out Friday afternoon here, Chris, and they were higher. The wholesale beef trade on the choice cuts were actually 81 cents higher Friday. Selects were up 74 cents, and here we have this kind of an open, and this is after the cash market held $100 last week.
Yeah, and it seems like that there's a lot of optimism in the cattle market. There doesn't seem to be near as much optimism in the beef market with the way that the consumer still has limited places for food service. We're still unfamiliar with how the grocery stores are marketing a lot of the product to the consumer. And probably the most interesting thing that I have seen so far is just the lack of kill capacity, not kill capacity, but the kill slaughter rate that we've had. We projected 3,000 and 4,000 more than what the weekly kills have actually turned out to be, and with the weights continually to increase, we have to believe that there is just beef backing up somewhere or another along the line.
Now let's look at the pork cutouts, and Friday on the pork carcass values, they were up $1.13 Friday afternoon. So they were quoted at 71.93 per hundredweight. Loins were up $4.42. Hams were up $1.55, and we had the bellies down 75 cents. Overall, though, it looks like that trend has been picking up because the carcass values were about $3 higher than what they were the week before that, Chris.
Yeah, and interestingly enough, we are starting to catch up. If you think about the literally 2 months that we missed of marketings and production cycles out there, that seems to be catching up, and especially in the cattle market, because we've seen the last 3 to 4 weeks elevated numbers of marketings that we've seen in the back end of it, but yet we still don't see the bigger, heavy marketings in the feed coming out of the feed yards that would lead us to believe that meat is flowing through there. It seems like that we've had a lot of transactional taking place from the feeder cattle market down, and now placed a lot of cattle here in the month of July, and starting off in the month of August looks like we may have some pretty hefty placements too. So I think we're building up some really big reserves that'll be ready right about the wintertime.
And the Dow right now up 259 points. Thank you, Chris, for talking with us. I appreciate it so much. Chris Swift of Swift Trading, and he is based in Nashville. Janet?